You open your trading platform. The chart is moving. You told yourself you'd wait for the right setup, but there it is, a small breakout, a slight momentum shift. Your hand moves before your mind catches up. You enter the trade. Within minutes, you're watching the price reverse again. You close it, small loss, not catastrophic, just another cut. You tell yourself you'll be more careful next time, but next time looks exactly the same. And here's what makes it worse. You know better. You've read the books, you've watched the videos, you've taken the courses. You understand risk management. You know about position sizing. You can explain the psychology of trading to someone else with perfect clarity. But when you're sitting there, staring at that chart, watching that candle close, all of that knowledge evaporates. Your hand is already moving, your mouse is already clicking, and by the time your rational mind catches up, you're already in the trade. This isn't about discipline. It's not about having a better strategy or more screen time. The problem is that your brain is wired to seek resolution, and the market is wired to delay it. Most traders think patience means waiting, but waiting is passive. Patience in trading is active endurance inside uncertainty. It's the ability to hold your nervous system steady while everything around you begs for a decision. The common advice is to follow your plan, stick to your rules, trust the process, but no one talks about what happens in the seconds before you break the rule. No one explains why your body feels like it's suffocating when you're not in a position, or why doing nothing feels harder than doing something, even when doing something is obviously wrong. No one talks about the physical sensation of watching a move happen without you. The tightness in your chest, the heat in your face, the way your breathing changes, the way time seems to slow down and speed up at the same time. There's a reason for this, and it's not weakness. Your nervous system doesn't distinguish between missing a trade and missing a bus. Both feel like loss. Both trigger the same stress response. Your amygdala, the part of your brain responsible for threat detection, interprets inaction as danger when there's movement around you. This made sense 50,000 years ago. When everything around you was moving and you stood still, you were probably about to be eaten. Your ancestors who felt uncomfortable standing still while others ran survived. The ones who didn't feel that discomfort didn't make it. So you inherited a nervous system that equates stillness with vulnerability. But the market isn't a predator, and movement isn't safety. In fact, in trading, the opposite is often true. The traders who survive are the ones who can stay still while everyone else is panicking. But your body doesn't know that. Your body is running ancient software in a modern environment, and until you understand that, you'll keep responding to false alarms. Let's take two traders. Both have the same capital, both learn from the same course, both trade the same markets. The first trader, let's call him Adam, watches the charts constantly. He's always looking for the next entry. He tells himself he's being proactive, he's engaged, he's learning. When he sees a pattern that's almost right, he convinces himself it's close enough. He enters. Sometimes it works, often it doesn't. Over 6 months, his account oscillates. He's not blowing up, but he's not growing either. He's busy, but he's stuck. Adam wakes up thinking about the market. He checks his phone before he gets out of bed. He's looking at pre-market movements, reading news, scanning for gaps. He sits down at his desk with coffee and opens 4 charts. He tells himself he's being thorough. He's covering multiple time frames. He's watching correlations. But really, he's just feeding his nervous system the stimulation it's craving. By 9:30, he's already taken 2 trades. Both were marginal setups, both scratched. By 10, he's frustrated. By 11, he's forcing trades to make back the commissions he lost. By noon, he's down. Not a lot, just enough to hurt, just enough to want to win it back. This is his pattern. He doesn't see it as a pattern. He sees each day as different, but they're all the same. The details change, the structure doesn't. The second trader, let's call her Maria, watches the charts less. She has a list of setups she's waiting for. She knows what they look like. She knows where they appear. Most days, they don't show up. On those days, she does nothing. She doesn't feel guilty about it. She doesn't feel like she's missing out. She's not refreshing her phone obsessively. When her setup finally appears, she takes it. She doesn't hesitate. She doesn't second guess. She enters with size, with confidence, because she waited for her moment. Over 6 months, her account grows steadily, not because she traded more, because she traded less.
Maria wakes up at the same time every day, not because she's disciplined, because she's structured. She has a routine that doesn't depend on the market. She exercises, she eats breakfast, she reviews her plan, not her charts, her plan. She already knows what she's looking for. She wrote it down the night before. She's not making decisions in real time. She made her decisions when her nervous system was calm. When the market opens, she's not excited, she's not anxious, she's neutral. She checks her charts once at the open, once at the close. If her setup appears, she takes it. If it doesn't, she's done for the day. Adam thinks Maria is lucky. Maria knows she's just bored less easily. The difference between them is not intelligence. It's not even risk tolerance. It's their relationship with inaction. Adam has been conditioned to believe that activity equals progress. Maria has learned that progress often looks like stillness. Adam's brain is constantly searching for stimulation. The market provides it. Every tick is a new possibility. Every candlestick is a new narrative. His dopamine system is hijacked by volatility. Maria's brain has been trained differently. She's built a tolerance for the discomfort of waiting. She's rewired her reward system. She doesn't get dopamine from entering trades. She gets it from executing her plan. This rewiring doesn't happen by accident. It doesn't happen because you want it to. It happens because you build an environment that makes it inevitable.
Let's talk about what's actually happening in your brain when you're staring at a chart. Your prefrontal cortex, the part of your brain responsible for planning and decision-making, is trying to evaluate the setup. It's asking questions. Does this match my criteria? What's the risk? What's the reward? Where's my stop? But while it's asking these questions, your limbic system, the emotional center of your brain, is screaming. It's not asking questions. It's making demands. Move, do something, act. The problem is that your limbic system is faster than your prefrontal cortex. Emotions arrive before thoughts. The feeling of urgency hits you before the rational evaluation completes. And if you don't have a system to slow that process down, your emotions win every single time. This is why traders who rely on willpower always fail eventually. Willpower is your prefrontal cortex trying to override your limbic system. And it can do that for a while, but your prefrontal cortex gets tired. It has limited resources. Every decision you make drains it a little bit. Every temptation you resist costs energy. By the afternoon, you've made 100 small decisions. You've resisted a dozen impulses. Your prefrontal cortex is exhausted, and that's when you take the stupid trade. Not because you're weak, because you're depleted. Maria doesn't rely on willpower. She relies on structure. She doesn't resist the impulse to trade. She removes the opportunity. She's not sitting in front of her charts all day, white-knuckling her way through the session. She's not there. She can't take a bad trade if she's not watching the market. This sounds simple. It is simple, but simple is not the same as easy. Most traders can't do this because they're addicted to the feeling of being in the market, not to trading, to watching. The act of watching feels productive. It feels like you're doing something. It feels like you're learning. But most of the time, you're not learning. You're just feeding a habit. You're training your brain to expect constant stimulation. And the more you feed it, the more it demands. Here's a test. Close your trading platform right now. Not after this trade, not after you check one more thing, right now. See how that feels. If you feel relief, you're probably fine. If you feel anxiety, if you feel like you're missing something, if your hand keeps reaching for the mouse, you have a problem. And it's not a trading problem, it's a nervous system problem. Your brain operates on prediction. It's constantly trying to reduce uncertainty. When you're watching a chart and you don't have a position, your brain interprets that as unresolved tension. It wants closure. It wants to know what happens next. So it nudges you. It whispers. It tells you that entering the trade will give you clarity. And it's right, entering does give you clarity, but clarity is not the same as correctness. You've traded your uncertainty for a position, but you haven't increased your edge. You've just moved your anxiety from one place to another. Patience in trading is the ability to sit inside that uncertainty without relieving it prematurely. It's not about suppressing the urge. It's about recognizing the urge as a symptom of your prediction system misfiring. The market doesn't care whether you're in a trade or not, but your brain does. And until you separate those two things, you'll keep entering trades you shouldn't take. There's a principle here that most traders miss. It's called selective exposure. In psychology, selective exposure means you only engage with information that confirms what you already believe. In trading, it means you only engage with setups that meet your criteria. Not setups that are close, not setups that might work, setups that fit.
This sounds simple. It's not, because selective exposure requires you to ignore most of what the market shows you, and ignoring is an active process. It's not passive, it's not lazy, it's a form of focus. Think about how much information you're exposed to in a single trading session. Hundreds of candles, dozens of patterns, multiple time frames, news headlines, social media chatter, price alerts, volume spikes. Every single one of these is a potential trigger for a decision. Your brain has to evaluate each one. Is this relevant? Is this my setup? Should I act? And each evaluation costs energy. This is called decision fatigue, and it's why most traders are exhausted by lunchtime even though they haven't physically done anything. Maria practices selective exposure. She has 3 setups. She knows them deeply. She's traded them hundreds of times in her journal, in her mind, on demo accounts. When she sees them, she recognizes them instantly. When she doesn't see them, she doesn't invent them. Adam, on the other hand, practices broad exposure. He watches everything. He's open to anything. He thinks this makes him flexible, but flexibility without criteria is just reactivity. He's not adapting, he's just responding to noise. Over time, this difference compounds. Maria's brain starts to filter the market automatically. She's not consciously scanning for her setups. Her pattern recognition system does it for her. She can glance at a chart and know in seconds whether it's worth her attention. Adam's brain stays in constant evaluation mode. Every chart is a puzzle. Every move is a potential entry. He's exhausted by the end of the day. Maria is calm. This is where most trading advice falls apart. It tells you to be patient, but it doesn't tell you how to build the internal architecture that makes patience possible. Patience isn't a personality trait, it's a skill. And like any skill, it's built through repetition in the right conditions. Let me tell you what this actually looks like. In the early stages, when Maria first started waiting for her setups, it felt unbearable. She would sit there watching perfect-looking trades happen without her. She would see other traders posting wins. She would refresh her charts obsessively, hoping her setup would magically appear. She would feel like an idiot for having such strict criteria. She would think about loosening her rules, just a little, just to get in the game. But she didn't, not because she had iron discipline, because she had a plan for the discomfort. She knew it was coming. She expected it. She wrote down exactly what she would do when she felt the urge to trade outside her setup. She would close the charts. She would walk away. She would go do something else, not something relaxing, something engaging, something that required focus. She would read. She would code. She would work on other projects. She wasn't distracting herself. She was redirecting her focus. This is a critical distinction. Distraction is avoidance. Redirection is channeling. When you distract yourself, you're just running away from the discomfort. It follows you. You're still thinking about the market. You're still checking your phone. You're still wondering what you're missing. But when you redirect, you're giving your brain something else to focus on, something that demands attention, something that provides its own sense of progress and accomplishment. Over weeks, then months, the discomfort faded. Not because Maria got used to missing trades, because her brain learned a new pattern. It learned that not trading when there's no setup doesn't mean missing out. It means staying safe. It means preserving capital. It means waiting for the high-probability moment. Her reward system shifted. She stopped getting dopamine from entering trades. She started getting it from following her process, from executing her plan, from watching her equity curve grow steadily over time. Adam never made it through this phase. Every time he tried to be patient, he would last a few days, maybe a week. Then he would see a move. And he would think, this is it. This is the one I should take. And he would take it. And sometimes it would work, which made it worse, because now his brain had evidence that breaking the rules pays off. So the next time, it was easier to break them again. He never stayed patient long enough to rewire his reward system. He kept resetting. He's still resetting. There's something happening here at a neurological level that's worth understanding. Every time you repeat a behavior, you strengthen the neural pathway associated with that behavior. This is called Hebbian learning. Neurons that fire together, wire together. Every time Adam takes an impulsive trade, he's strengthening the neural pathway between seeing a chart move and entering a position. Every time Maria waits for her setup, she's strengthening the neural pathway between seeing market noise and doing nothing. Over time, these pathways become highways. They become automatic. Adam doesn't consciously decide to take impulsive trades anymore. His brain just does it. The pattern is encoded. Maria doesn't consciously decide to wait anymore. Her brain just does it. The pattern is encoded. This is why changing your trading behavior feels so hard. You're not just changing a habit, you're literally rewiring your brain. And your brain resists rewiring. It prefers efficiency. It prefers established pathways. Change requires energy, and your brain is optimized to conserve energy. So when someone tells you to just be patient, they're telling you to fight millions of years of evolution and months or years of reinforced neural pathways. With what? Willpower? It's not enough. You need a system. You need an environment. You need repetition in the right context. Here's what that looks like in practice. Every morning, Maria opens her charts. She reviews her setups. She doesn't look for opportunities. She looks for her opportunities. If they're not there, she closes the platform. She doesn't keep it open in the background. She doesn't check it every 15 minutes. She's done. She's not avoiding the market. She's respecting her own criteria. Adam opens his charts and starts scanning. He's looking for something. He doesn't know what, but he'll know it when he sees it. 3 hours later, he's still scanning. He's seen 12 possible trades. He's taken 4. 2 scratched, 1 small loss, 1 small win. Net result, slightly negative, but more importantly, exhausted. The difference is in the rhythm. Maria's rhythm is binary, setup or no setup, trade or no trade. Adam's rhythm is continuous, maybe this, maybe that, let me watch a bit longer. Maria has built a decision environment that eliminates ambiguity. Adam lives in permanent ambiguity, and ambiguity is where discipline dies. Let's go deeper into what ambiguity does to your decision-making. When you're in an ambiguous situation, your brain can't form a clear prediction. It's stuck in evaluation mode. Should I do this? Should I wait? Is this the right time? Maybe, maybe not. This state of uncertainty is metabolically expensive. Your brain is burning energy trying to resolve the question. And the longer you stay in this state, the more desperate your brain becomes to resolve it. Any resolution starts to feel better than no resolution. This is why traders take bad trades after sitting in front of charts for hours. They're not taking the trade because it's a good setup. They're taking it because their brain needs to close the loop. It needs to resolve the tension. The trade is the resolution, even if it's wrong, even if they know it's wrong. The relief of making a decision feels better than the agony of staying uncertain. Maria never enters this state. Her decision environment is designed to prevent it. She's not asking herself whether she should trade. She's checking whether her condition is met. The decision was made weeks ago when she defined her setup. She's just executing. Adam is making the decision in real time every time, which means he's burning cognitive energy every session, and eventually it fails him.
Now let's talk about what happens when you don't build patience as a system. When you don't build patience as a system, you start to rely on willpower, and willpower is finite. Some days you have it, most days you don't. On the days you don't, you overtrade. You take setups that don't fit. You chase moves. You exit too early because you can't handle the stress of holding. You tell yourself it's just one bad day, but one bad day becomes a bad week. A bad week becomes a bad month. You're not losing because your strategy is wrong. You're losing because you're not trading your strategy. You're trading your emotions, your boredom, your need for stimulation. And here's the quiet tragedy. Most traders never realize this. They think the problem is external. They think they need a better indicator, a better time frame, a better market. So they switch. They learn a new system. They try scalping, then swing trading, then algo trading. They're in constant motion, but the motion is lateral. They're not improving. They're just moving. Adam has switched strategies 6 times in 3 years. He started with support and resistance. Then he learned about candlestick patterns. Then he discovered indicators. Then he heard about price action. Then he tried ICT concepts. Then he went back to basics. Each time he thought he found the answer. Each time the same problems followed him. He would start strong. The new method would work for a few weeks. Then slowly the old patterns would return. The impatience, the overtrading, the losses. He would blame the strategy. He would search for a new one. Maria doesn't switch. She deepens. She trades the same setups for years. She doesn't get bored. She gets better. Her execution gets cleaner. Her risk management gets tighter. Her psychology gets quieter. Adam keeps searching. He's been trading for 5 years, but he's really been trading for 1 year 5 times over. This is the difference between depth and breadth. Most traders pursue breadth. They want to know everything. They want to trade every market, every time frame, every strategy. They think more knowledge equals more opportunity. But in trading,
Breadth without depth is noise. You become a generalist in a field that rewards specialists. You know a little about everything, but not enough about anything. You can't develop intuition because you're constantly starting over. Maria pursued depth. She picked 3 setups and ignored everything else. This felt limiting at first. She felt like she was missing opportunities. She was. She was missing hundreds of opportunities, but she was only missing opportunities she couldn't reliably capitalize on. She was focusing on the opportunities she could, and within those opportunities, she developed something Adam will never have: mastery. Mastery doesn't come from variety, it comes from repetition. It comes from seeing the same pattern in different contexts until you understand not just what it looks like, but what it means. Until you can feel when it's right and when it's not. Until you can sense the difference between a setup that's technically correct and a setup that's actually high probability. This sensing, this intuition, only comes from depth. Here's what depth looks like. Maria knows her setups so well that she can tell you what happened the last 20 times she saw them. She can tell you which ones worked, which ones failed, what the market conditions were, what the context was. She's not guessing, she's not hoping, she's operating from a database of experience. When she sees her setup, she's not evaluating it from scratch, she's comparing it to her database. She's asking, does this match the ones that worked or the ones that failed? And she knows the answer instantly. Adam can't do this. Every setup he sees is new to him because he's changed his methods so many times. He has no database, he has no intuition, he has only theory, and theory doesn't survive contact with the market. There's something else happening here that most people don't talk about. When you practice patience consistently, your identity starts to shift. You stop seeing yourself as someone who's trying to be patient. You start seeing yourself as someone who is patient. This is not semantic, it's neurological. Your brain builds a self-concept based on repeated behavior. Every time Maria waits for her setup and takes it cleanly, she reinforces the identity of a patient trader. Every time Adam jumps into a trade out of impatience, he reinforces the identity of an impulsive trader. Over time, these identities become automatic. Maria doesn't have to remind herself to be patient. Adam doesn't have to remind himself to be impulsive. They've both become what they've practiced.
This is why traders who suddenly become profitable often describe it as a shift, not a strategy change. They didn't learn something new, they became someone different. And that shift happened because they repeated a behavior long enough for it to become their default. Let me be specific about what this shift feels like from the inside. In the beginning, Maria had to fight herself constantly. She would see a trade she wanted to take, and she would have to physically stop herself. She would put her hands in her lap. She would stand up from her desk. She would say out loud, "This is not my setup." It felt forced. It felt artificial. She felt like she was denying herself something valuable. But over time, the fight got quieter. She would see a trade that wasn't her setup, and instead of wanting to take it, she would just not. There was no internal battle, no negotiation. She would look at it, recognize it wasn't her setup, and move on. The desire to take it never even arose. This is the shift. This is when patience stops being something you do and becomes something you are. Adam is still fighting every single day. He still has to tell himself not to take bad trades. He still feels the pull. He still loses the battle sometimes. He's been doing this for 5 years, and it still requires effort. He thinks there's something wrong with him. There isn't. There's something wrong with his process. He's trying to build patience through willpower instead through structure, and willpower alone never works. So here's what this looks like as a rhythm. Not a rule, not a checklist, a rhythm. You define your setups, not vaguely, precisely. You write them down, you draw them, you backtest them until you see them in your sleep. Then you wait. You don't watch the market all day. You check at specific times. If your setup is there, you take it. If it's not, you leave. You don't negotiate with yourself. You don't look for alternatives. You've already decided what you're waiting for. The decision was made before you opened the chart. This rhythm removes decision fatigue. You're not deciding whether to trade. You're recognizing whether your condition is met. Recognition is faster than decision. It's cleaner, it's less emotional, and over time, it becomes unconscious. You see the setup, you take it. No internal debate, no second guessing, just execution. But let's talk about what happens during the waiting, because this is where most traders fail.
They understand the concept of waiting for their setup. They agree with it intellectually, but they don't have a plan for the hours or days between setups. So they fill that time by watching the market. And watching the market when you're waiting is like trying to diet while sitting in a bakery. The temptation is constant. The sensory input is overwhelming. You're making it harder on yourself than it needs to be. Maria has a rule. When she's not in a trade and her setup isn't present, she's not allowed to watch live charts. She can review them at the end of the day, she can study them historically, but she can't watch them move in real time. This rule sounds extreme. It is extreme, and it's necessary, because her brain can't distinguish between watching for learning and watching for opportunity. When she's watching live price action, her action system is activated. Her body is primed to move. And if she's primed to move, eventually she'll move. So instead, she fills her waiting time with other things. She works on her backtesting. She reviews her journal. She reads about market structure. She does things that improve her trading without putting her in a position to trade impulsively. She's building skill during the downtime instead of building tension. Adam doesn't have this structure. When he's waiting, he's watching, and watching turns into evaluating, and evaluating turns into rationalizing, and rationalizing turns into entering. He doesn't plan to take a bad trade, but he's sitting there watching, and his brain starts whispering. This looks pretty close to your setup. It's not perfect, but it might work. You've been waiting 3 days. You need to make something happen. What if this is as good as it gets today? And he listens, and he enters, and he loses. This happens because he's operating in a reactive mode instead of a proactive mode. Reactive mode means you're responding to what the market shows you in the moment. Proactive mode means you've already decided what you're looking for, and you're simply checking whether it's there. Reactive mode depletes you. Proactive mode conserves you. When you live in this rhythm long enough, something strange happens. The market stops feeling chaotic. It doesn't become predictable, but it becomes manageable. You're no longer trying to catch every move. You're waiting for your move. And your move comes. Maybe not today, maybe not this week, but it comes. And when it does, you're ready. Let me tell you about a specific moment that changed everything for Maria. It was 4 months into her new approach. She had been waiting for her setup for 6 days. 6 days of checking her charts twice a day and seeing nothing. 6 days of watching other traders post their wins. 6 days of feeling like she was wasting time. Then on the 7th day, her setup appeared. Perfect alignment, multiple confirmations, everything she had been waiting for. She took it, full position, no hesitation. The trade ran for 3 days. When she closed it, it had made more than her previous 2 months of overtrading combined.
That moment rewired something in her brain. She understood, not intellectually, but viscerally, that waiting wasn't wasting time. Waiting was compounding probability. Every day she didn't take a bad trade was a day she preserved capital for the good trade. Every setup she skipped because it didn't fit was a setup that couldn't hurt her. She wasn't being lazy. She wasn't missing out. She was being selective, and selective is profitable. Adam has never had this moment. He's never waited long enough. He's never given himself the chance to experience the payoff of patience. So his brain never learns the lesson. His brain still believes that more activity equals more opportunity, and until he experiences evidence to the contrary, he'll keep believing it. This is the problem with most trading education. It teaches you what to do, but it doesn't teach you how to survive the waiting. It doesn't prepare you for the psychological warfare that happens between setups. It doesn't tell you that most of your trading career will be spent not trading. It doesn't tell you that boredom is part of the process, that discomfort is part of the process, that feeling like you're missing out is part of the process. So when you feel these things, you think something's wrong. You think you're failing, and you override your plan to make the discomfort stop. But the discomfort isn't a signal that you're doing something wrong. It's a signal that you're doing something right. You're supposed to feel uncomfortable when you're not trading in a market that's moving. That's your nervous system trying to protect you from a threat that doesn't exist. The challenge is to feel the discomfort and do nothing. Not suppress it, not fight it. Just let it be there while you wait. Maria describes this as sitting with the tension.
When she feels the urge to trade and her setup isn't there, she doesn't try to make the urge go away. She notices it. She acknowledges it. She says to herself, I feel like trading right now, and I'm not going to. Then she sits with that tension, sometimes for a few seconds, sometimes for a few minutes, and then it passes. It always passes. The urge is a wave. It rises, it peaks, it falls. If you can wait for it to fall without acting on it, you win. Do that enough times, and the waves get smaller. They come less frequently. Eventually, they barely come at all. Adam tries to fight the urge. He tells himself he's not allowed to trade. He gets angry at himself for feeling it. He tries to distract himself. But fighting the urge makes it stronger. What you resist persists. The more he tries not to think about trading, the more he thinks about trading. The more he tells himself he can't, the more he wants to. He's locked in a battle with himself, and eventually he loses. Because you can't win a battle against yourself. You can only end it. Maria ended the battle by changing the terms. She's not fighting the urge to trade. She's honoring her commitment to her setup. It's a subtle but critical difference. She's not denying herself something. She's choosing something better. She's not saying, I can't trade. She's saying, I only trade my setup, and this isn't it. One frame makes her feel deprived. The other makes her feel empowered. Let's talk about what happens over the long term, over years, because patience in trading isn't just about individual trades, it's about the trajectory of your entire career. Most traders quit within the first 2 years, not because they lost all their money, because they lost hope. They put in the time, they put in the effort, they studied, they practiced, and they're still not profitable. They don't understand why. They think they're missing something, some secret that profitable traders know but won't share. There is a secret, but it's not a strategy. It's time. Profitable trading takes longer to develop than people expect. Most traders expect to be profitable within 6 months, maybe a year, but the reality is closer to 3 to 5 years. Not 3 to 5 years of trading, 3 to 5 years of trading the right way, with patience, with discipline, with structure. If you're trading the wrong way, you could do it for 10 years and still not be profitable. Time alone doesn't teach you. Deliberate practice does. And deliberate practice in trading means waiting for your setup and taking only your setup over and over until your brain rewires. Adam has been trading for 5 years, but he's not 5 years along the path. He's reset so many times that he's maybe 1 year along the path. He hasn't given any single approach enough time to work. He hasn't built the neural pathways. He hasn't developed the intuition. He's still a beginner, and he'll stay a beginner until he stops switching. Maria has been trading for 3 years. She's actually 3 years along the path. She's never reset. She's never switched. She's been building on the same foundation from day one. She's not perfect. She still makes mistakes, but her mistakes are smaller. Her recoveries are faster. Her equity curve trends up, slowly, steadily, boringly. And that's the point. Most traders want excitement. They want to tell stories about the big trades, the big wins, the big risks. But consistent profitability is boring. It's the same setups, the same process, the same outcome, over and over. The traders who need excitement get it, usually in the form of big losses. The traders who accept boredom get something better, compound growth. Here's what compound growth looks like in trading. Let's say you start with $10,000, and let's say your edge gives you a 2% return per month on average. Not every month. Some months you'll lose, but over time, the average is 2%. Most traders would look at that and feel disappointed. 2%? That's nothing. They're looking for 10%, 20%. They want to double their account every month. But let's run the math. 2% per month compounded monthly is about 27% per year. After 5 years, your $10,000 becomes $35,000. After 10 years, it's $90,000. After 15 years, it's $250,000. After 20 years, it's $680,000. You didn't do anything exceptional. You didn't hit any home runs. You just made 2% a month consistently with patience, and you ended up with generational wealth.
Adam is chasing 10% per month. He hits it sometimes, then he gives it all back. Then he hits it again, then he gives it back again. Over 5 years, his account has gone from $10,000 to $8,000. He's down 20%. He's worked harder than Maria. He's spent more time in front of the charts. He's taken more trades, and he's lost money. This is the brutal math of trading. Activity doesn't equal profitability. Patience does. Edge does. Consistency does. But most traders never learn this because they quit before they see the results. If you've been trading for a while and you're still stuck in the same place, it's worth asking yourself, are you waiting for setups or are you waiting inside the market? Those are two different things. One is patient, one is just present. Presence without purpose is distraction. Patience with purpose is profit. You don't need to change your strategy. You might just need to change your relationship with time. Try this. Tomorrow, before you open your charts, write down the one setup you're looking for, just one. Then look at the charts only twice, once in the morning, once in the afternoon. If the setup is there, take it. If it's not, close the platform. See how that feels, not for a day, for a week. You're not trying to make money, you're trying to build a rhythm. The money comes later, the rhythm comes first. And if you can't do this, if the idea of only checking twice feels impossible, that tells you something important. It tells you that you're not in control. The market is. Your nervous system is. Your boredom is. And until you take that control back, you'll keep making the same mistakes. Most traders are solving the wrong problem. They're trying to find more opportunities. The real problem is they're taking too many. Patience isn't about waiting longer, it's about knowing what you're waiting for and letting everything else pass. The market will always be there. The opportunities will always come. The question is whether you'll be there when they do, with capital, with clarity, with confidence. Or whether you'll have burned out months earlier, chasing moves that were never yours to begin with. Patience isn't passive. It's the most active thing you can do. It's choosing your future over your present. It's choosing your plan over your feelings. It's choosing to be the trader you want to become instead of the trader your nervous system wants you to be. And that choice, made consistently over time, is the only thing that separates the profitable from the hopeful.